Good afternoon and welcome to Pay Entry's weekly Thursday webinar. Today we'll be presenting information on the Employee Retention Tax Credit, a topic that has confused and still confusing many people. Just to let you know, I am not an attorney. Brianna's not an attorney. She's online with me today, and we're not attorneys or CPAs. And the information that we're providing today should not be considered legal or financial advice. So we're presenting the facts as we currently understand them so that you have a general knowledge of the rules. I'm Kathy Graham. I think I've met over the phone many of you. I'm head of the HR services area. Brianna Grimes is online with us today too. She is our senior consultant in HR services, and she'll be fielding questions at the end of this presentation. So if you have a question, type it into the questions box on your screen, and it will be answered at the end of this session. Okay, so what exactly is the Employee Retention Tax Credit? Well, ERTC is a credit that businesses can claim against taxes that they owe on qualified wages, including certain health insurance costs that are paid to employees. So bottom line, there are a lot of tax credits flying around out there now. You know, we have the one for the paid leaves of absence for COVID. And a lot of times it is confusing. People get this one confused with that one. So there are two separate sets of rules for each of those. But this one was originally put in place to help employers pay their employees even when they were laid off so that they wouldn't lose them. So it was originally just what it says. It was an employee retention effort. And several pieces of legislation have started and impacted this effort to retain from 2020 into 2021. The Coronavirus Aid, Relief, and Economic Security Act, which is called the CARES Act, effective in March of 2020, made the credit effective until the end of 2020. At the last minute, the Consolidated Appropriations Act extended this tax credit to March the 31st of this year, which has come and gone. And then the American Rescue Plan Act, the last one that came out, approved in March, was effective April the 1st of 2021, and it does extend to these credits to the end of 2021, not to be confused with the paid leave tax credits, which expire in September. So this actually does run until the end of the year. The CARES Act in 2020 defined it as for employers who qualified, and retroactively, at the time they said that those who were getting a PPP loan could not apply for the ERTC. But yes, they've changed their mind, so you can go back and retroactively capture any credits that you may have been due. In 2020, you could claim a credit for 50% of qualified wages paid, up to $10,000 per employee annually. And that was for wages paid between March the 13th and December the 31st of last year. Okay, so that would be in effect $5,000 for the year. The Consolidated Appropriations Act, which came out next, increased the credit to 70% of qualified wages paid, up to $10,000 per employee per quarter for the first 2 quarters of 2021. So that would mean that you could get a $7,000 credit on an employee's wages for first and second quarter of 2021. That's $14,000 in credits. And then the American Rescue Plan Act came out and extended it to the end of 2021. So the credit remains now at 70% of qualified wages, up to $10,000 limit. So you can have a maximum of a $7,000 credit per employee per quarter for each quarter in 2021. $28,000 credit for each employee. That's a lot. Now, there is a new rule too under this plan or this act where certain startup businesses, those that started after February the 15th of 2020, that had to shut down due to a government order, may be allowed a credit of up to $50,000. That is per quarter. That's something you need to talk with your accounting firm about. So here's a chart just showing the quarters and what the tax credit was. And for example, in quarter 2 of 2020, the employer could have a 50% tax credit of $10,000 up to $5,000, and they can use it once in the year for that employee. So we would not have anything in Q3 or Q4 because they've already used the credit. But in 2021, the $7,000 credit per employee is available all year, each quarter. The retention credit applies to the employer's share of the Social Security tax, which is 6.2% of wages. So you would file taxes and your credits would go against the Social Security tax that you were matching for your employees. And if there is a deficit, that means you have more tax credits than you do taxes to pay, you would be issued a check. Your tax credit is realized through the regular submission of your payroll taxes minus the tax credit toward those Social Security taxes. And we do that through our system at Pay Entry. You do have to sign up for it. And so if you are interested in doing that through the payroll, then you would need to just talk to your client advocate about setting that up. And there is no repayment of this, which is a good thing. So this is truly a tax credit. Okay, so who qualifies for the credit? Most employers do. It now is very straightforward that colleges, universities, hospitals, and 501c organizations can be included in this. And it also includes now businesses who previously took a PPP loan that were excluded before. And the qualification of eligibility is determined by one of two factors. The first factor is if you were a trade or business that was fully or partially suspended, or you had to reduce your business hours due to a government order. Back up here, just a tricky finger. So that was the first factor. The second factor is any business that has experienced a significant decline in gross receipts. In 2020, the employee retention tax credit required a significant decline in gross receipts, as defined it's defined as the period that begins. Now this is a tongue twister. Begins with the first calendar quarter in 2020, where the gross receipts are less than 50% of the gross receipts for the same calendar quarter of 2019. So you're doing a look back and comparing a quarter in 2019 to a quarter in 2020 to determine that. And if you had in 2020 a 50% decline in gross receipts, that would qualify you for this. It does end with the calendar quarter following the first calendar quarter where the quarterly gross receipts are greater than 80% of the gross receipts for the same calendar quarter in the prior year. So it ends when the gross receipts are back up to 80% in a quarter. Another piece of the second factor is that in 2021, it was modified for January of this year through June of this year. A significant decline in gross receipts means the period beginning with the first calendar quarter in 2021, where the gross receipts are less than 80% so it's more generous this year, of gross receipts for the same calendar quarter of 2019, and it ends with the calendar quarter following the first calendar quarter where your gross receipts are greater than 80%. So when you get back up to 80%, then it ends. Your availability of this tax credit ends. The IRS has a really good website with FAQs on the topic. This is the website. You do have a handout on your screen that you can have access to. We will be sending you a copy of this webinar after the webinar ends, so you will get a copy, so you can actually click on this link. But if you click on the link, it will take you to the FAQs for the ERTC. And they are not current yet. There's a little note at the top that says it's not current and you need to add some additional information, which is over. There's a little thing you can click on. It gives you access to the most recent legislation, and it is over 100 pages long. If you so choose to read it, it is fascinating. Not really. Okay, so you're able to defer, or I'm sorry, get a tax credit for wages of your employees. So what are wages? Wages that are subject to the FICA taxes, as well as your qualified health plan expenses can be included. They qualify when you're calculating this retention credit. So not only do you have the wages that are paid, but you are, which would include commissions, bonuses, tips, anything else that you count as wages now on a W-2. But then you can add the qualified health expenses to that to increase the amount. Health plan expenses are the cost that you pay as an employer and the employee pays with pre-tax salary contributions. Any after-tax contributions by the employees do not count as wages in this context, but anything that you pay to provide a group health plan and the employee pays with pre-tax salary contributions are covered. Now, these must have been paid after March the 12th of 2020 and qualify the credit if they're paid through the end of this year. Remember that the credit can only be taken on wages that are not forgiven or expected to be forgiven under PPP. So when you're calculating the time frame that you're going to look at are the quarters. Remember which quarter you used the PPP funds in. If they are forgiven, you cannot use those wages because it's double dipping. Or if you expect to be forgiven, you cannot use those wages during that quarter or time frame. Going on with what are wages, in 2020, if you had over 101 full-time employees, the wages paid for employees not providing services were eligible for this. So if you had a layoff or a suspension from work, shut your business down for a while, you could use this for wages that you paid to employees that weren't working. If you had 100 or less full-time employees, then any wages you paid to an employee, regardless of whether they're working or not, would be included as eligible. The 2021 laws that have come out have changed. They've upped the a number of employees. If you have 501 or more full-time employees, the wages paid for not providing, and that's not FTEs, I should have spelled that out, it's actually full-time employees from a headcount standpoint. The wages that you pay for not providing service, so if you paid people to be laid off or be suspended, you continued to pay them, then you could get a credit for that. And if you had 500 or less, it's any wages that you paid to an employee, regardless of whether or not they're performing work. So the difference between 2020 and 2021 is it went from 100 to 500, basically, including more employers in the availability of the credit. Okay. And the definition of a full-time employee, just for your information, is an employee who worked an average 30 hours a week. It is similar to the ACA definition that you used for headcount there. So it's 30 hours a week. Here I have just provided a qualification guidelines chart. I'm not going to go over that right now, but I wanted to put it in your packet so that you'd see that who's eligible, what's the threshold for employees, and here it's 100 and 500, and how you actually calculate the credits. When you're determining what wages, the qualified health plan expenses, remember to include both the employer and the employee pre-tax portion. Don't include any after-tax amounts that the employee paid. Okay, so at the end of each of my webinars, I like to say, what should employers do now? If you didn't take advantage of the ERTC in 2020 because you got a PPP loan and you thought you couldn't, that restriction has been appealed, and you can file an amended return to make sure you can take care of that credit. We can help you with that. We just need you to do the work on the front end to identify the quarters where you want to get the credit, basically. You have to identify it by employee, by quarter, and we can take care of that retroactive filing for you. Employers, right now, if you haven't thought about this before, determine your eligibility for these tax credits. Did you have a decrease in business, or was your facility closed and you were impacted by that? It's funny because I've talked to a couple of companies, not many, but a couple of companies that their business actually went up during the pandemic because of takeout orders instead of dine-in orders. Not a lot of restaurants doing that well. So and I wanted to mention too that I didn't put this in your package, but if you are a restaurant and you want to reach out to me, I have a special document that was put out by the National Restaurant Association that shows how you can benefit from the employee retention tax credits, and I'll be happy to share that with you. So determine your eligibility and work with your CPA or accountant on this. I mean, you may be able to figure this out by yourself, but you probably want somebody that's trained to look at numbers to share that with you. And then talk to your pay entry client advocate about pay entry's ability to file for your tax credit. It is a seamless operation. We can set it up so that each pay period and at the end of each quarter, there's a filing that considers your tax credits in your reporting. Okay, does anybody have any questions? And I will tell you that if they're very specific questions about your company, I'll try to answer them. But if not, we do have a copy of the questions, and we'll get back with you after the webinar is over if you want to type that in.
Okay. Well, awesome, Kathy. Thank you for all that great information. We do have a couple of questions, so I'm going to go through them. But if anybody is still kind of contemplating your question, feel free to type it into the question box at this time. But we do have a couple in there already. So this first question is, we are a self-insured company and we pay premiums for the policy, but we also pay claims up to a stop loss amount. Would only the premium qualify, not the claims paid, both or neither?
You would use the premium that you have set for the plan.
Okay, so the premium is what would qualify?
Mm-hmm.
Okay, gotcha. All right.
That's a very good question.
Next question is the credit available for all 4 quarters of 2021 or only quarter 1 and quarter 2?
It's available for all 4 quarters.
Okay. We also have a restaurant interested in the information that you have, so I will shoot over the name of that restaurant after the webinar so you can send them the document, Kathy.
Sure. Mm-hmm.
Next question is, are we able to compare quarters in 2021 to quarters in 2019, or does it have to be 2020 to 2019? Or excuse me, 2020 to 2021.
It can be 2021 to 2019 also.
Okay. All right. If you took advantage of the credit in 2020, are you able to take another credit in 2021 if you qualify?
Yes, you are.
Okay. On the chart for 2021, is the gross receipts comparison to the same quarter in 2019 or 2020?
Yes, it is. The same quarter in 2019.
Okay. And how much does pay entry charge to file?
You know, I think it varies by complexity, but I think the other day I heard somewhere around $400 to file an amended 2020 940.
Is that information that they could get from their
They
payroll
can get
specialist?
from their, yes, if you ask your client advocate, they could tell you.
Okay, perfect. All right. If we apply for the ERTC and amend our 2020 Q1 and Q2 payroll form 941, do we amend 2020 and 2021 corporate income tax returns as well?
Yes, you can only file for Q2 in 2020 because the bill wasn't approved until March. So you do Q2 through Q4, and you would have to amend your tax returns.
Okay.
And I'm not a tax person, so ask someone that. But yes, if you change anything about your taxes paid in the prior year, you would have to change your reporting.
Gotcha. Okay. If we are expected to be forgiven for a PPP loan for a 2020 calendar quarter, can we claim this tax credit if we qualify otherwise?
Yes, you can.
For 2021 to 2019, what percentage is the gross receipts drop? Is it 50%?
Say that again, Brianna.
For
50%?
Yeah, they're asking if
20,
the gross receipts drop is 50% for
it is
the.
50, yeah, it's 50% for 2020. And it's
What
80%.
about
And in 2021, it's 80%.
Okay, gotcha. Is there a deadline for filing for 2020?
I don't think so.
Okay. We're a corporation. Do wages paid to owner employees, are wages paid to owner employees eligible?
Only if they are an employee, and there's a maximum amount you can claim, I believe. Well, there's a maximum amount of $10,000, but if they're employees on the payroll, yes, you can include them.
Gotcha. Okay. Next question. We did use PPP funds to help cover payroll, and we got forgiveness for PPP loan number 1, but we have not applied for forgiveness for PPP loan number 2. Are we eligible?
If you think that you will be forgiven, if you're spending the money the way that you were supposed to, then yes, you can do that in anticipation of forgiveness.
Okay. We are a credit union and we are a 501c. Can we take advantage of this program as well?
Yes, you can. 501Cs are included.
Okay. Can gross receipts for 2021 be compared to only 2019 or also 2020?
Just 2019.
Okay. And how can a business determine their gross receipts?
Well, you would look at your financials for year end to determine, well, each quarter you would have a set of financials that would show what kind of revenue you generated or what kind of receipts you had. That I would talk to your accountant about, because that's something that may vary by company. It would for a nonprofit uses different things to determine, receipts versus a manufacturing company. So I would determine that with your accounting firm.
Okay. Next question, our PPP loan period ended October 10th of 2020. Can we use the fourth quarter wages starting with October 11th of 2020?
Yes, you can. And if you were forgiven, you can or you think you're going to be forgiven, you can use October also.
Okay.
As long as you don't double dip.
Gotcha. All right. If we aren't sure if we'll qualify for 2021 Q3 and Q4, should we proceed as usual and file the amended 941 form?
Can you say that one more time? I'm sorry.
Sure. They're asking if they are not sure if they're going to qualify for quarters 3 and 4 in 2021. Should they still file their amended 941 anyway?
Well, you don't have to file an amended 941 for 2021 because we're not finished with 2021 yet. So you would only be filing an amended 940. I think it's a 941X for the 2020 year because it's closed.
Okay.
And
All right.
if you do, like, say you get into second quarter and you filed for first quarter, and we've done your 940 for the first quarter, yes, you can redo your, refile your 940 during the year with, I don't believe there's a cost to that, but you could reach out to your client advocate or your payroll specialist and ask them that question. But because I think it's fairly common to have 940s revised. So, but I know that we do that also.
Okay. Next question is, how long does it take for the entire process from letting pay entry know and then the amendment until the IRS decision? So I
The
guess they're kind
IRS,
of looking for a
well,
timeline.
the IRS doesn't decide. They don't make a determination. What you do is assume that you're qualified based on the rules, and unless you're audited and you don't really qualify, then the IRS doesn't really get involved in determining whether you're eligible or not. You determine whether you're eligible. You take the tax credits, and I think it takes, once we get something in-house from you to tell us, what credits to take or who to set up for the credits, then I think it takes 2 to 3 weeks, if I'm not mistaken. And again, your client advocate can tell you that exactly.
Okay. Someone's asking about the webinar recording. Yes, this webinar was recorded today and we will be posting it to our website. You will also receive a copy of the recording sometime tomorrow afternoon in an email. Next question is, can we apply credit against 2020 deferred tax payments?
That's an accounting question, so I'll pass on that one.
Okay. If you're eligible for this in quarter 2 of 2020, but not quarter 3, are we done or can we do quarter 4 if we meet the 50% requirement?
You can still use any quarter in 2020.
So they don't have to be consecutive quarters.
No, it doesn't have to be consecutive quarters.
Gotcha. Okay. Did you say that if we did get forgiveness on our PPP loan, we can still apply for this credit? If there's a qualification.
I was just thinking about that. I think that's the reverse answer, is that if you are forgiven, you can't use it because you got free money. So you would not be able to use it. It's only if it's not forgiven. I'm going to have to look that up and respond to that person because I just thought about that hit me after I answered that question. But that really doesn't make sense for you to get the PPP approved and then be able to use the tax credits. Let me think about. Ask me the next question, and I'm going to think about that for a minute.
Okay, sounds good. I believe we had a clarification on a previous question. So that previous question where they were asking about amending the 941X, what she meant to ask was, since they don't know if they're going to qualify for future quarters, should they apply in advance for the credit or should they just wait and see if they qualify and then file the amended 941X?
Well, they need to see if they qualify before they file because they might be paying taxes back if they suddenly don't qualify. So you need to, first of all, know if you're going to qualify.
Okay, so wait to know if you're going to qualify, and then
Yeah.
if you need to file the amended form, you can.
Right.
Gotcha. Hopefully that clears it up. Another question, are you sure we're able to file the 941X for 2021 quarter one? So you wouldn't need to file
Yes.
any amended forms until the 2021 tax year is over, correct?
Right. You would just amend your 940 at that point in time. It wouldn't be for the whole year, so it's just a quarter's worth of information.
Yeah, and I think the 941Xs that we're talking about
That's
amending are for the 2020 quarters because 2020 is over, correct?
right. It's
Okay,
for an entire year, a prior year.
gotcha. Okay, hopefully that clears it up. Next question. When you say you can't double dip, do you just mean wages used for the credits cannot be used for the PPP loan forgiveness as well?
Yes, and I don't know where I've got that information now, but yes, if you are approved, and I'll change that. If your PPP loan was approved, you got you got money from the federal government, and they don't want to give it to you again. So if your loan is forgiven, or you think it's going to be forgiven, then you can't use those wages. I apologize for that.
Gotcha. So it's only if the loan is not forgiven or
If
they
the
don't
loan
think
is
they're going to
not
be
forgiven,
forgiven, then
right,
they can apply
right,
for the ERTC. Okay.
right.
All right. For 2021, if we don't know if our PP loan will be forgiven, should we just wait?
I'm sorry, repeat that.
So for 2021, they're asking if they're not sure if their PPP loan is going to be forgiven, should they just wait or
I would
to
wait.
apply for the tax credits?
Yeah, if you don't know, if you're not secure in thinking that, I mean, you didn't use your required portion for payroll, et cetera, generally, if you use the portion that you're supposed to for payroll, you're going to get approved or you're going to be, forgiven. But if you don't know, wait
Gotcha.
to be
Okay.
sure.
Next question. If our quarter two 2021 sales receipt is lower than our quarter two 2020 sales receipt, can we qualify for the ERTC?
If it is the percentage allowable, right? Yes, you
And that
can.
is the 80, is it the 80% for
80,
2020?
it's 50% for 2020, 80% for 2021.
Okay, so it would have to be 80% lower in 2021 than 2020 to qualify.
Then in 2019.
Sorry, in 2019.
Yeah.
Okay,
Yeah.
all right. For 2021, for example, if you qualify in quarter two, but not quarter three, can you qualify in quarter four?
Yes.
Okay, so that's kind of what we went
It's
back,
quarter by
what we said
quarter,
earlier.
right?
Yeah, so even in 2020, 2021, it doesn't matter. They do not have to be consecutive quarters.
They do not have to be consecutive quarters.
Okay, perfect.
And I want to right now restate it because I found the language. But if you have a PPP loan, um, forgivable payroll costs under the PPP loans don't include amounts taken into account for purposes of the ERTC. The CAA, the Consolidated Appropriations Act, retroactively amends the CARES Act to provide that employers who receive PPP loans can elect to treat the payroll costs paid during the loan's covered period as qualified retention wages to the extent the wages are not paid for with forgiven PPP loan proceeds. And it sounds like there's some additional guidance that's supposed to be coming out from the Secretary of the Treasury on that. But just you can't have a forgiven loan and the ERTC for those same wages.
Gotcha. Okay. So can an ERTC be claimed retroactively for 2021?
Yes, just like for 2020, it can be claimed retroactively.
If we don't have gross receipt numbers for 2021 Q1, can we file the 941, then file the 941X if we qualify?
I would talk to your client advocate who can talk to our tax department about that.
All right, if our PPP loan was forgiven, can we still apply for wages paid outside of the covered period?
Definitely.
Okay. Will our client advocate be able to help us with a form of the credit, including the health insurance premiums, if they're higher than the employer taxes owed?
It will automatically in our system, if what you put together exceeds the taxes that you were obligated to pay, then the system will, I'm not exactly sure how they do that. The client advocate would know, but I know that you are entitled to the overage in either at year end or during the year. And I think our tax department could answer that question. So contact your payroll specialist.
Okay. And if I qualified for the ERTC in 2020 and I had the PPP loan and then used it in Q3 of 2020, can I still use the ERTC for Q4 of 2020?
Yes, if you were out of PPP funds in Q4 and weren't using it to pay wages, then you can use Q4.
Gotcha. Okay. And if we have qualified health insurance to add on to the ERTC, do we share calculation to pay entries separately to add to the claim?
You would provide an amount for that we would use for each person.
Okay, and then we have one last question. Is it correct to say that a quarter in 2021 has to be less than 80% of the corresponding quarter in 2019? They just want
Yeah.
to clarify how that percentage
Mhm.
works.
Yeah, it has to be less than
Okay,
2021.
perfect. Well, then that is all the questions for today, Kathy.
Okay, thank you very much. And if you have any questions after this, please feel free to reach out to us. You can reach us at hrservices@payentry.com. If you're interested, we have a new HR services compliance package that's hot off the press yesterday. Makes HR really affordable for companies. So reach out. We're happy to talk with you about anything that we do on a webinar or anything that you have questions about. So thanks for attending today. I hope I haven't still confused you. But if I have, it certainly will sort itself out over the next probably 6 months, and it won't sound as confusing as it is right now. So let us know if you have any needs. Thanks for attending, and have a great day.